Hi and welcome to the Market Alert for Friday the 14th of January 2022. So the fundamentals first, Bitcoin break-evens and big tech breakdown as inflation batters bond bears. The yield curve, now flatter than a year, is flashing the red Fed policy error flags. We've got a global economy heading for the mother of all supply chain shocks as China locks down ports. Temporary, one would hope, but hugely disruptive all the same. So that's an interesting one, isn't it? That's not been in the mainstream. World's largest asset manager central banks are trapped as they can't fight supply-driven inflation. So this is going to give a problem and a headache for Powell, given inflation dynamics are supply-driven and central banks should not lean too aggressively against inflation. Have a look at the markets. There's a lot brewing behind the scenes coming down the line for the fundamentals. Just looking at these three headlines. News today, though, just before we get into looking at the markets, the criminals out today at 1:15. Then we've got core retail sales for the US, industrial production and prelim UM consumer sentiment. So the only ones really are going to be the retail sales and Lagarde, but she's not speaking until lunchtime at 1:15. Let's have a look at the Dow, if I can find it. Many charts open this morning. So there we go. So yesterday we see the Dow once again moving to the downside, and we're now seeing support at 50% retracement and attempting to try and move back to the upside there. There's a pattern that's been prevailing over the last few days with the Dow, and that is the market being run up in the pre-market session and then hammered in the main event. And we may see that this morning in the German DAX as well to start with, and then being brought back as we get further weakness coming into the market with the fundamentals. But it's interesting to see that the last few days, that pattern happening. Again, you can see that's the third day this week. There's another one. That goes back to Monday and seems to have started on the 7th of January. Oh no, you can see the pattern. It's incredible, isn't it? It's up in the thing and then down in the main event. That's until we go back to the 4th of January, that actually just continued. But that was everybody coming back. But since they've settled back in, it's up, down, pre-market, up, down. Apart from this day, we had a bit of a sell-off, but they managed to move it up, and then eventually it came back down, but not as obvious. And there again, we got tried to hold it, but it didn't. But it sold off hugely. Wasn't able to move higher, but then sold off, and they tried to bring it back again, up in the overnight, down in the. So there is a bit of a pattern there, up, down, and again, certainly in the last week. And down, and yesterday as well. So keep that in mind, that you can see prices move up in the pre-market and getting hammered at 2:30 when the cash market opens. In the German DAX, wherever it is, too many charts open, as I say. So right, we've got the German DAX back at 62% retracement as well. And this is overnight. So the market moved down, found support at the golden ratio there and the 20-bar moving average in the daily chart, and is now attempting to move higher. I can't draw any fibs on this back to the upside because the low is moving. It's fluid. It's until the end of today's session. I can't say that it will be cast in concrete. It might not actually come lower than what it is at the moment. So what I've done is I'll use the 30-minute chart. And if I go from yesterday's high, which is shown there, down to the low, I can actually draw this in, but I want 38 and 50 as well on this one. So let me just grab those. So instead of using the daily, I can use the 30-minute chart and see exactly where I am and where I'm likely to find the first lot of resistance, and that the DP is actually a 50% retracement there as well. In yesterday's 2-minute charts, we had the market moving lower. We then had a trade to the upside, but again, just barely a scalp because the market hit the previous day's close. and then became really choppy. And this is why I've been working so hard on actually getting the new updated strategy finished and out to you, so that we can move to a bigger time frame to get rid of this noise that is building up quite considerably in the smaller time frames. And then in the afternoon session, again you can see the market following the Dow and then moving lower, and unfortunately there's no automatic signals, but as I've just said, in the new strategy you will see that there will be plenty opportunity, no matter what the market, to actually pick up the trades. The markets change, and we have to change with them as they start. I mean, we've had a pattern for years where pullbacks in the stock markets were buy the dip and move higher, and that seems to be changing. As is, if we just move on to the metals as well, at the moment silver's being allowed to move to the upside as well, which is very interesting at the moment. I was expecting the market to be hammered. That's been the pattern for years, but that seems to be changing all of a sudden. There's still the initial open hammering, which we've seen over the last week as well, apart from the 12th where it was allowed to move up. But we know that pattern exists, even if it's small. It has been the same, and like I say, it's interesting, isn't it? You can go back and you can look in a 30-minute chart. Do you think the chart's not actually moving because it's that obvious? But the patterns change, and then we have to change and adapt to them as well. So that's why I'm currently working on the new strategy, which will be completed by next week and then rolled out. So silver at the moment being allowed to move to the upside, which you can see there, actually getting through that 89% retracement at the moment. A lot of volume for this bar, which is slightly worrying, but there's a lot of selling in this one compared to the previous bar, but hopefully it will continue through the 89 and manage to get back through this high here, so that we can then head back towards the $25 area. In the gold market, also just trading through the 89 there as well. We need to keep moving, take out this 62, a really strong resistance area here that needs to be taken out, because you've got previous high golden ratio and 3 highs here as well, like a triple double top. Dollars moving lower. This is what causing the gold and silver market to move lower at the moment. So close through 78.89 would be useful. It's a shame that this gold and silver market aren't allowed to move as quickly to the upside as this is moving to the downside, but it is what it is. And more fundamentals for the global economy. Crude oil still moving to the upside, sideways yesterday, but heading to back to $84 a barrel for crude oil there. Okay, that will do it for this one. And if there is anything else to report, I'll let you know. But let's keep an eye on what happens today and see if those patterns continue in the Dow and also in the silver market. That's it for this one. As ever, thanks for watching. See you in the next one.